Welcome to Cape Peninsula Capital. Today I'm going to talk about the technical analysis of Atlas Corporation. And as always, I will give you a broad overview about the chart. And in the end of this video, I will provide you with a setup where I give you the exact numbers where I will enter the trades, where I see the targets, and also where I will put my stop loss. So now we come to the overview. This is a very typical chart for the last 1.5 years. So we have this huge sell-off in the beginning of 2020, and since then we are in a recovery. If we take a look at the trend, we can see that we are in a clear uptrend, where we have formed higher highs and higher lows. And since March of 2021, we are fighting with this resistance area. So we tried several times to overcome this resistance area, which is defined by this last significant high. And in the last week, we were able to close above this resistance area, which now should act as support. And what's also very important, we cleared this resistance area with a high volume. So we got a confirmation by the volume. So if you are trading breakouts, you always should look at the volume, because if you have a breakout in combination with a low volume, it's very often the case that this will end in a false breakout. Now we also can take a look at the MACD, so we can see that we are right before this buy signal, before this crossover. So also from the indicator side, we are in a bullish territory. I have one problem with this trade, because normally if you are trading bull flags, so here you have the pull and here you have the flag, you want to see the correction go to the 38 Fibonacci retracement. And in this case, we only were able to retrace around 23% of this former pull. So from this perspective, the correction is not sufficient. If we take a look at the time, so normally you should correct 25% of this former pull, and it took around 25 to 50% of the time of this pull. So this is sufficient from the perspective of the time. So this is where normally the correction should end off a bull flag. So this is one of the reasons why I will reduce my risk for this trade. So normally I will risk 1% of my portfolio per trade. And in this case, I will only risk 0.5% of my portfolio. Now we come to the actual setup. So I will enter the trade when the price closes above $15, because I wanted to clear this whole noise, and I want to also close above $15 because this is also a psychological resistance area. My target is at around $22. This is the one-to-one projection of this pull, and I will place my stop at around $13.37. So this will leave us with a risk-reward ratio which is above 4. So this is very, very good. So thanks for your time. If you have any questions, please put them down into the comment section. And I wish you great success with your trading. Bye-bye.